In this chapter, we're going to talk about regulatory taxation and performance issues with not-for-profits. So much like with governments, one of the bigger challenges that you will see with a not-for-profit is in assessing its performance. So with for-profit businesses, they're relatively straightforward because, the question is the business making money? How much money? What is the ratio of its profits to expenses? With not-for-profits, their goals are diverse and specific methods are needed to be able to, accurately determine whether or not a not-for-profit is performing up to spec. So some learning objectives from this chapter: distinguish not-for-profit organizations from entities in governmental and commercial sectors of the U.S. economy. Describe how and why states regulate not-for-profits, and describe the following: not-for-profit and corporation laws, registration, licenses, and tax exemption. Also identify how the federal government regulates not-for-profits in terms of their tax-exempt status, unrelated business income, restrictions on political activity, and excessive benefits received by officers, and also the reorganization and dissolution of a not-for-profit. Describe governance issues of not-for-profit boards, including incorporating documents of board memberships. Describe how benchmarks and performance measures can be used to evaluate not-for-profits. So defining the not-for-profit sector. So again, the major thing here is when we look at not-for-profits, we have to look at what each not-for-profit aims to do. So an organization geared towards limiting homelessness is going to be different than an environmentalist organization, is going to be different from, let's say, a rock collecting club. And they're going to have different criteria in terms of judging their performance. So when we look at not-for-profits, we first have to question, are they governmental or not for governmental? What is their tax exempt status? And how do they maintain that? Also, if they're governmental, what is their particular purpose? So the creation of a not-for-profit is usually done through filing a form with the IRS and issuing a Form 990 each year. So I'm going to list a link to GuideStar, which is a not-for-profit organization that charts not-for-profit Form 990. So the Form 990 is once a organization is determined to be a not-for-profit each year, it has to file a public disclosure relating to its major activities. So generally speaking, when we look at not-for-profits, Section 501c3 of the Internal Revenue Code basically states that any charitable, scientific, or philanthropic venture can apply to be a not-for-profit with the IRS. Also, with regards to state laws, so the IRS, remember, is federal law. With regards to state laws, not-for-profits can incorporate and often must register at the state level, similar to corporations or LLCs or LLPs, to officially organize. So not-for-profit and corporation laws basically are the same as corporate laws. They have to choose a name that's not misleading, designate a resident agent, state a clear purpose for the entity, appoint a board of directors, write bylaws that delineate broad responsibilities of operating structure, call at least one board meeting a year, and require management to report on the financial conditions at least once a year. Also, they have compliance reporting, and they must file specific tax returns with the state as well as the federal government. Also, when you look at other local regulations, sometimes they are required to get licenses to be able to solicit charitable contributions, and also licenses, for example, for special events such as selling alcohol or conducting, let's say, poker night or bingo night or whatever. Also, they sometimes have to agree to adhere to open meetings laws. So when we look at possible tax exemptions, not-for-profits can be exempted from sales, real property, personal property, transfer, employment, and excise taxes. So at the federal level, there are the tax dimensions of not-for-profits, but also they have to adhere to various labor laws regarding not-for-profits and their operations. Generally speaking, if the not-for-profit brings in less than $5,000 a year, it does not need to file an IRS tax return. Also, the organizational test for tax exempt status must specifically limit the organization's activities to only those of a charitable purpose. So, are they a charitable, religious, scientific, literary, or educational organization? Now, it's also interesting with this part of the Internal Revenue Code, credit unions are actually part of 501. And basically what a credit union is just a not-for-profit bank that is a collective put together by its owners. So private foundations and public charities. So again, filing the Form 990. Not-for-profits can engage in certain types of lobbying purposes. However, they are also limited in terms of their political ability. So if they are engaged in a political action or lobbying, they have to be organized as a Section 527 organization. So these organizations cannot participate in any political campaign, and they're limited in terms of what they can lobby over and who they can lobby for. So the Form 990, again, is basically the not-for-profit tax return. Now, if the not-for-profit, for example, owns a business and it uses the income from the business for its charitable purpose, that business will have to file a normal business tax return, and that not-for-profit will note that as unrelated business income. So typically with unrelated business income, the activity is not part of the organization's operations. It is simply, let's say, a business or holding that the not-for-profit owns. Here is an example. Let's say you have a university that owns a large apartment complex on the other side of town, and it runs the apartment complex as a non-subsidized housing operation, and the income from that apartment complex would be considered unrelated business income. Also, there are limits, and this is an equitable test, it's somewhat subjective, on excessive benefits to officers. So if, for example, you have a not-for-profit that brings in $10 million of gross receipts, and the CEO of the not-for-profit gets $9 million a year, likely the IRS is going to pay some attention to it. So dissolution can occur either on a voluntary or involuntary basis, or the not-for-profit can be organized into a different type of entity. So with governance, as with all corporations, there is a board of directors, there's often regulatory oversight, and then there are professional managers. So obviously it's important to have proper articles of incorporation, bylaws, and to keep minutes of board meetings and have written policies. So they can either be voting or non-voting not-for-profits. The board of directors is ultimately responsible for the not-for-profits organization. Now, when we look at benchmarking and performance measures for not-for-profit. As I said, GuideStar is a good resource to look at. Better Business Bureau, Wise Giving Alliance, Charity Watch, Urban Institute, Charity Navigator, and Independent Sector are all good resources, because when we look at performance metrics for not-for-profits, you can't really compare apples and oranges. You have to look at similar organizations and be able to benchmark whether or not that organization is doing good or bad relative to similarly situated organizations. So some performance measures are liquidity. Is it a going concern? Is it over leveraged? What is the program expense efficiency? And also when we look at non-financial performance measures, we look at how essentially effective the organization is. So how many people are they feeding, clothing, educating, taking care of, rather than simply the amount of money they use. So remember, one of the biggest issues that we see with not-for-profits is hours volunteered of non-professional services are not counted as assets to the organization, and they're not deductible as contributions for the people that contribute those hours. So this creates a bias. So if you give money to a not-for-profit, you get a charitable tax deduction. But if you give hours to a not-for-profit, that cannot be deducted from your taxes. So again, the major point in terms of evaluating not-for-profits is, one, look at their financial statements, go to GuideStar or other similar outlets, but also ask yourself, what is the not-for-profit doing? Is it effective in its goals? Is it something that's just there for PR and show? Or is it actually accomplishing certain tasks?